So welcome to another breakdown of this mentorship, and again we will start out by looking at the economic calendar, right? So the first step is always determining the trading conditions, right? That's always the first thing to do. If trading conditions are not in our favor, we don't want to look at the charts and we don't want to consider taking trades, right? So therefore, again, we take a look what news events are we going to have in the upcoming week, and we can see we have a really calm week, you could say. We only have two high impact news events on Monday and on Thursday, right? And again, we don't trade on Mondays unless it is a NFP week or we have a low resistance liquidity run in the direction of the daily order flow, right? And then you can see the only remaining high impact news event is on Thursday New York session at 8:30 p.m. New York time, and we have the unemployment claims, right? So we also know, if we go back to TradingView, we also see that we have been talking about this higher time frame level, right? The volume imbalance, where we want to possibly anticipate a higher low to be formed on the daily, right? To then see a possible reversal happening and taking out those buy side highs here and eventually the highs up here, right? So combining those two circumstances, right? The economic calendar having almost no significant news in this week, and also where we are trading price action rise, right? We are trading in a discount. It's likely you will see another week of accumulation or consolidation here. So we want to be really selective with our trades for the upcoming week. So last week we stopped here, so we still have our higher time frame POIs. I will quickly extend them in time. So then we will first of all let Monday range play out, right? We always want to wait and see what Monday is doing to then take the information we get from the Monday close to get a better idea of the upcoming week, right? So most Mondays, if it's not, as I mentioned, an NFP week or a low resistance liquidity run according to the order flow or the daily chart, then Mondays will either be a retracement profile against the higher time frame order flow or a consolidation profile, and which we both of those ideally want to avoid to trade, right? So we have Monday here, and you can see we continue to retrace from the move we initiated during the NFP release on the week before, right? We had NFP on Friday, and you can see we retraced right again into the 0.5 level of this volume imbalance. Then we get a bullish reaction off of that level here, right? And then we have the Monday daily close here as well. So now, as Monday is about to close right here, we can already take a look at the daily chart, right? And we can see we again found support at the equilibrium of this volume imbalance, and for now there's nothing really clear to see on the daily, right? We're still being slightly bearish here because we still have the bearish order flow and still no confirmation of a shift yet. So we are still more bearish, and as I mentioned, on NFP we have been trading at this really important level here, the volume imbalance, the inverted volume imbalance, and also the daily bearish order block. And you can see how price got sent down then in the following NFP session, right? So now we also have a balanced price range here, right? We have a bullish fair value gap, which we overlapped here with this fair value gap. So all of this is a balanced price range. So we marked it out in time, and again we have the 0.5 level. And if we go down to the H1, we can also refine that level, and we can see that we have inside of this level we also have H1 fair value gap, right? So we have again PD area alignment, we have balanced price range aligning with H1 fair value gap on the sell side here, right? And if we take the fib again from the swing high to the swing low, we can also see that it's resting right in the discount premium of this range here, right? So this is also a valid POI because it's in a premium, right? We now have also equal lows here, and this could act as a potential for liquidity, but again, we don't really want to aim for much below because we know, okay, this is a potential support level for price, so if we take shorts, we want to take our profit already in this area here, right? So now we will first of all let the Asian session play out again, right? We have the Monday close, and let's pull out the session indicator again. We have the Asian session right here, and again we can see we had a consolidation profile during Asia, right? And we've also taken out the external liquidity here, but as we did not see any displacement during Asia, we also don't expect the London session to be a continuation, but we expect another manipulation above the Asian highs if we are bearish, right? So we have London coming up here, right? And now we have those equal highs here, right? We have the pre-London highs and also those highs, so we now want to see price trading in that level here, and then we want to see a shift in order flow again to the downside to confirm shorts. So what could be a potential narrative here, right? We have the higher time frame POI, we have a range here, and now we could say, okay, we could potentially have an AMD here, right? We have a range. So this is our range here, and we now see again we have the London session profile aligning with the AMD, so we could have the manipulation, so manipulation of the AMD combined with the session profile of London open manipulation, right? And now we can expect, or we want to see, the shift in order flow getting back into the range, and then we want to play the distribution of the AMD, right? This could be a potential narrative, right? But we can also say we have another market maker model here, right? We have the original consolidation, which is the Monday lows, then we have the reaccumulation, and here the smart money reversal. And we also have the daily profile narrative, which in this case is again the Monday range, right? We have Monday high, Monday low, we are deviating above Monday's high, and as we are bearish, we now want to look for shorts. Again, remember, if we are bearish, we want to look for shorts above the Monday highs, right? So now again, we wait for a shift in order flow. As this range is kinda a tight consolidation, we go down to the M5, and now we want to see again those highs being weighted maybe into this middle, the equilibrium of the H1 fair value gap, and as well as you can see it's aligning with the middle of the H4 balanced price range, right? So again, this is a high probability POI. So we take out the high, right? We have a rate on buy side, and now we want to see if we can get a shift in order flow. In this case, we have a small fair value gap here, and we have also an order block right here, right? Out of those down close candles, create one order block, and now we want to see price at least closing below the middle, and ideally also below the lows of this order block, and we then would have a breaker here, and we could short here, and then put our stops above the high and aim for the lows, the Asian lows, and then depending on how we react here, right? If we get a sweep, then a shift in order flow again, we will probably cut our trade, but if we can see that we can break below the Asian lows and get a continuation, we will aim for the Monday lows, right? So now we wait, and there we go. We get this displacement to the downside, creating a bearish value gap here, and also closing below this fair value gap. So we have now the first signs of a possible reversal. And again, I told you, or in the course in the PDF, you can read that if we expect London to make the high of today, we want to see London to make it ideally in the first hour, so around 3 a.m. As you can see right here, we have the 3 a.m. close, or the 3 a.m. opening price here, right? And it would also align with that time if we can now get the shift in order flow here. And there we go, we now got the break below, right? And at this point I will put my limits at the low of this breakup block, right? And then I will put my stop above the breakup block, right? So we have a 7.3 stop, and as you can see as well, again, we are still trading above the New York Open here. We mark it out again with our purple line. So there we go, we have the New York Open here. And so we are trading above Monday's high, above the New York Open, so we are trading in a premium combined with the high time frame level. So this is, in my opinion, a really good setup with high probability. We have the narrative, so we have all steps of the protocol done. We have determined the trading conditions, we have the bias, we have the narrative, and we have the entry confirmation, right? So now we will put our TP right here, so you can see it's a 6.5 RR trade, so we can also see that it's a really good risk reward. And then here we got the fill, right? We trade back into the order block here, and now I also don't want to see us closing back above the 0.5 level here, right? A wick above is fine, but not a close, because then it would likely be another sweep of this low, and we could potentially see another run of this high, and that's not what we want to see, right? We want to see no price displacing lower here. And there we go, we displaced lower, and as you can see now, we have taken out the Asian lows as well, and this short-term low here as well. And now we can move our stops to break even here as well, and let the trade run, right? You can obviously take some partials here. So for example, here we would have a 3.5R. You can take some partials here. It's always good if you take something off at around 3R to pay yourself, right? You don't want to see your trade running for 3 plus R and then reversing back to your entry. So always take something off. It never hurts to take some profits. And you can see now we are about to close London session as well. And again, we now have New York, and ideally New York will be a continuation. So I personally, I don't like to play the continuation New York here, because we have already had a big expansion, and if we take our anticipated range, right, so we anticipate this to be the range today, the high, and then we will trade into those lows. And if we take the fib from the high, the low to the high again, you can see that we are now trading already in a quite deep discount. So shorting here is not really, in my opinion, a good play, right? As we're already short from here, so risking your equity again here is, in my opinion, not worth it, right? So we wait for New York, and again we expect the retracement at New York Open into potentially an PD array from the London session, right? So for example, we have just H1 FVG here, which could be a potential POI. And now we will go back to the M5 and we will wait for the New York Open, right? So we have New York Open here, right? You can see we retrace to the upside, and we quite did not manage to trade into the H1 FVG, as you can see we rejected before, and we are now also about to hit hopefully our TP here, right, which is also aligning with the middle of this volume imbalance. So you can see we take the volume imbalance, the middle, get a small bounce, but then we take out the sell side, which are the Monday lows, right? So at this point our trade would hit full TP, and we should be done with our trading for this day, as also the daily range expansion has been met here, right? So then we can go to higher time frame again, and we will go forward in time, right? We will now wait for Tuesday close to see where we close up, right? So we close here, and we can now check the daily again for the daily close, right? And you can see we are still in the consolidation. We still have the PD area supporting price, and we still have our volume imbalance capping upside here, right? So still we don't have a clear directional bias at this point. So back to the H1, and we again let Asia play out, right? And now we want to see, now I don't really have a clear bias. We have equal lows here, but we also have the volume imbalance acting as support, so shorting here is not really, in my opinion, a good idea here. So we now want to wait what we will see during London, and we have London open here, so we trade below the the Asia lows, and we might now trade into those equal lows here, but we are also still for now trading at the EQ here of this, or the middle of this volume imbalance, so we might get another bounce here. And you can see we fail to take out this low. We take out this short-term low here, but we fail to take out the previous day's low. So now we have 3 equal lows here, right? And although we are now trading below Asia lows and below the New York midnight opening price, right, in a deep discount, and we also got the first signs of a shift in order flow here, right? We closed above this down close candle. If you go on the M5, you can see we also have a market structure break, and we have here a break of log, right? And we also closed above this value gap here, so we can argue that we have a shift in order flow here, but again, I would not long here because we have all the equal lows here, and it's against my rules to long above equal lows as well as shorting below equal highs. So in this case, I will sit out and see what price is going to do, right? And again, I told you this week we have almost no news, so we want to keep our expectations low and not really forcing any setups here which are not high probability, right? So you can see we trade now on the breaker here, and we get a reaction here. So you can see we could have longed here, but again, for the given reasons, although we have the higher time frame level here, which is the volume imbalance and our entry model, and we could potentially have a narrative here, which would be a market maker model, right? We have original consolidation, which are the Asia highs, reaccumulation, and then the smart money reversal here. And now we could say we have a lower time frame market maker buy model here. But again, the equal lows, they turn me off. I don't like to do that, lying above equal lows, so therefore we will skip this setup. And again, what many traders they misunderstand about trading, just because you know or you think you know what the next most likely direction is going to be, doesn't mean that you have to take a trade, right? You can anticipate direction, right? But you can still say, okay, I can't frame a trade setup here, right? You have to learn to become comfortable with seeing price trading into a direction without then trying to find a revenge trade or trying to FOMO into a position, right? You always have to think like a professional, right? You can't start to gamble and let your emotions take over, right? So we now have the New York session, and at this point we could say, or we could anticipate, that London probably made the low of the day here, and it's extremely unlikely for New York to reverse here. Although we have news here, but it's not a high impact news event, so probably won't be able to push price lower here. So now we have buy side here as well, which is the previous day's high. We might be trading into that. Again, I told you we might see another consolidation profile this week, so trading from range lows to range highs is likely. So we wait for the New York Open, and now again we want to see a retracement, and then we can potentially take a trade, continuation trade. aiming for those highs here, right? Previous day's highs. So if we take or go on the H1 again, right, to get our higher time frame POI, we can see that we have a balanced price range here again. We have this H1 fair value gap, which we have also marked out yesterday here as a potential New York continuation POI, but we failed to trade into it, right? So we now have this balanced price range. We trade into that during Asia. You can see right into the middle, to the equilibrium of the fair value gap. Got lower, then got a displacement during London. We have another balanced price range here, right? So this is supposed to be left open. This is a breakaway gap here as well, so this will be left open, right? And you can see we also have a fair value gap right here, but as we have the balanced price range right above and also this breaker block, I also want to see this being left open. So we have two potential POIs here, right? We have the balanced price range and we have the mitigation block actually, because we failed to make a new lower low here, so it's a higher low. So this is not a breaker block but a mitigation block, right? So then we will go back to the M5 and we will see if we can get a retracement back into this level here. So you see we have some consolidation here, and now we're starting to break down here, and we're about to trade into this H1 balanced price range, right? So you see we trade in the upper half and we got a reaction here, and we also have a potential shift in order flow here, right? We have closed above this up close candle, and we also have this fair value gap here, and ideally I want to see also closing above this fair value gap here. And there we go, we got the close above, so at this point we could take a long here, right? So I will enter probably, again I would market enter here personally, because sometimes we will go straight up and I retrace them back into this mitigation block or breaker block here in this case, or back into this inverted fair value gap. You often will be left sidelined, so therefore I would market enter here, right? And then again potential first TP would be here, but you can see it's only a 1.72 R trade and also only 16 pips away to our TP here. So I told you in the PDF I don't take trades which are below 2R, and I also want to see at least a 20 pip move until the first TP area, right? So in this case I would either skip the setup or I would take the setup and then aim for 2R at least, and then put my stops to break even as soon as we close above this high here, right? Because I told you we are in a ranging profile, so we might take this high out and then go back to range lows again, and I don't want to take a loss here, so I will aim for 2R above this high. If we get our 2R, then I'm fine. If not, then I will put my stops to break even and we might get stopped out again, right? So I would be filled here, right, as I market entered, and as you can see we also create a small fair value gap here, which you could have entered off, right? We trade into it right here, but yeah, I market entered, and now we want to see if we can get, and there we go, we would have hidden our TP here, right? And in this case I probably would only leave a small partial here, maybe aiming for those highs here, although probably won't. It will be hard for price to get up here, right? Because we already, as you can see, heavily overextended on the daily, and we also still trading in this balanced price range on the H4, and also we have this H1 fair value gap right here. So I wouldn't really leave a big runner here, maybe like 10-20%, and then put my stops to break even. So, and there we go, my runner would be stopped out at break even here, right? As you can see, the 0.5 level of this inversion, of this balanced price range, sorry, and this H1 fair value gap is still acting as resistance, and we've just taken buy side, so we might now get another reversal here. So yeah, at this point our trading for the day would be done again, and we would wait for the daily close to then re-evaluate for the first day, right? So we're now trading in the breaker here, right? And as you can see on the H1, we are still closing inside. We are not closing above the middle, so ideally we close above the middle, but in this case we closed below the middle but still inside, so it's not really optimal. But again, we have to consider we're trading out of kill zone, so it's already late in the day, so price action can be a little bit off. But yeah, we wait for the daily close now, and there we go. We have the daily close here, and now we take a look again at the daily chart, right? And again, you can see we have another consolidation profile. We open and close almost at the same level, right? And you can still see how this volume imbalance is still supporting price, right? And it's still not giving up until we don't get a close below the volume imbalance. I think this will form a daily low here, right? If we get a close below or below the middle of the order block, I then would say, okay, we might highly likely will then aim for the lows here. But at this point, we will stay neutral and be open for a bullish reaction here. In this case, we have this last up close candle, right? So to confirm some sort of shift in order flow, we first of all would want to see a close above this body here, right, of this up close candle, and as well ideally a close above this volume imbalance, right? So this will be the first indication of a possible reversal here out of this range. Then back to the H1. Again, we wait for London session. So we have Asia ranging here, right? We still have this H1 breakup block here. And now we want to see if we can get, again, lowing here. I don't really like it. We have the equal lows here. So we already had two winners this week, right? We had a 6.5 R trade and a 2 R trade here. So we made some decent profits. So it's also really important to not give back your profits to the market by taking low probability trades, right? Although we have a higher time frame POI here, and we also have the volume imbalance, and we are kind of bullish here. We are still ranging, so as I told you, we don't want to take trades in the middle of a range, and right now we are trading right at the middle of a range, and we also don't have a clear drawn liquidity, so taking a trade here is not the highest probability. So we have London open here, and you can see we first of all trade above the Asian highs, have a shift in order flow here, but again we don't short here because we don't have any context right here. See, we don't have a higher type of POI, we don't have a drawn liquidity, we're just trading in the middle of a range, so we don't want to engage here. That's why it's also really important to follow the protocol from step 1, right? Determine trading conditions, then going down to the bias, and then finding a narrative according to the bias, which also should show you in higher time frame POI to then frame such lower time frame executions on, right? Because if you trade such patterns here, right, without the context of time, all you do is you're trading patterns, right? And we don't want to trade patterns, we want to trade narrative and liquidity, right? So you can see we taking out the Asian lows, and this is a Utah swing, right? We take out the highs, we go to the lows, and then we reverse to the upside. And we also have a shift in order flow here. If we go on the M15, we have this order block here. We get up close above here, so we have a shift in order flow. And you can see how we close above here and then trade into the upper half and then get an expansion out of the order block here, right? And now we are approaching London close, right? London session is closing here, and now we are trading in the London lunch hours, right? London lunch hours are most likely a consolidation or a retracement profile most times, so we don't want to trade here. And now we want to wait for New York, and if we go on the H1, we can see we have another fair value gap here, which we closed above, and we also have all of those up close candles which we have closed above here in London. So yeah, and we've also, as you can see, we've already taken all the previous day's high here. So at this point, or we haven't taken it out yet. It's equal highs here, but again, there's not really a setup here on higher time frame level. We could have potentially said, okay, we have the lunch lows here, right? We might get an AMD here, so we have a range. Then we can see New York open manipulation below here, right? And then a distribution into those highs here, right? But as you can see, we now have already taken out the previous day's high, so at this point I'm not interested in this anymore, and probably there won't be any setup today, right? So we let New York session play out, and you can see we get the push to the upside, and now it's actually getting interesting here, right? We are now trading back in this volume imbalance, right? I mentioned if we get a close above this, we then could switch our bias to bullish for the short term at least, right? And consider this to be a bottom formation here, right? An accumulation to then fuel the move to the upside, right? So, but we have to wait for the daily close, right? At this point we could easily still reverse again, so we wait for the daily close. And there we go. We have the daily close right here, and as you can see, we have closed above the volume imbalance, right? And you can also see how we have a really big displacement candle here, right? And we've also closed above this up close candle, right? So this is now a mitigation block, right? Because it's the last up close candle, but it has failed to make a lower low, so it's not a breaker block, it's only a mitigation block, right? So we can mark this out as a mitigation block, right? So we go back to the H1. The chart is now looking a little bit overfilled, right? But we will clear up the chart after this trading week. So we have Friday now, and again we had a large expansion, and I told you if we have a large expansion and taking out a higher time frame liquidity pool, so in this case the previous week's high, those two things combined, the next day will most likely be a consolidation profile or a retracement profile, or at least the next day's London session should be skipped, right? So already we set our expectations low for Thursday, as we also Friday, sorry, as we also don't have any news driver here, and we don't really have a high probability market conditions here, so we want to keep our expectations low. So there we go, we have London open, and you can see we're now trading below the Asia lows, back in the volume imbalance here, and we have the mitigation block here, this gray area, right? This is our mitigation block, and again we now want to see price to close on the daily inside this level here, right? We don't want to see price getting back below this 0.5 level of the mitigation block, right? So as you can see, the entire day is just a consolidation profile pretty much, or more like a retracement profile, right? We had expansion and now we got a slight retracement, but again, I told you, a low probability